we are facing serious cyber challenges that are increasing with AI. We are facing serious operational risks when something, isn't quite working. Who do you call? This is the human desire, if you want. So again, we have to find that balancing act.
Welcome back to Breaking Banks. I'm your host, Brett King, and this is a continuation of the series we're doing on the new book Branch Tomorrow. I have, of course, one of our co-authors, Efi Pylarinou. Is that how I say it?
Pylarinou.
Pylarinou. Τι κάνεις καλά?
Πολύ καλά, ευχαριστώ.
Good. I'm well, thank you. So, Efi, where are you coming to us from today before we get started?
I'm actually in Zurich these days, although I've been in Greece for a while. So I would say, let's say, Europe, continental Europe, EU and non-EU. That's where I'm coming from, and have experienced the latest of, there was a revolt this summer in Greece because one of the four big banks decided to reduce their ATM network to like minimal, and people, of all ages were really upset, which ties into some of the trends that we're addressing in the book.
Yeah.
And
Absolutely.
before we get into this, I must say, hey, this is the physical.
Aha!
book, and it
You
is-
got a physical copy of it before me? How did that happen? What is going on?
Switzerland is in the center of Europe, and maybe mail arrives faster.
No, it's actually, I tell you what, my book is waiting for me at home in Bangkok. I'm in Dubai right now, so it is there. But I'm glad you got a copy. How does it? You've done books before, I presume, have you?
Of course.
Right. So, but how does it feel? How do you feel when you get a new book that you've published in your hands?
Look, I'm extremely excited because this is a book that it's not only the colors, it's got a bit of punky, funky
Yeah.
feel to the
Good.
cover. I love that.
Good.
It conveys this shift that has happened, from the traditional physical banking era
Yes.
to this, let's say, fidgetal era that we are in, and that is continuing to reshape how we consume financial services. And I love it. I think that it's a great cover that really conveys.
Awesome.
Mahogany color is no
Yeah, it's beautiful.
So that door, right?
Well, shout out to Kylie Maxwell, who designed the cover of the book. Kylie and I've been working on cover art for my books since, for more than 10 years. She designed Techno-Socialism, Augmented, Bank 4.0 covers. So, she does an incredible job. So, if you guys are interested in having a book design done, I know someone I can recommend to you. So let's jump in, Efi. You co-authored the chapter on the European Union with Paolo.
Yep.
Which and I was happy to edit the overall book, of course. You mentioned the ATM issue. I don't want to dive right into the sort of the social impact of this, but it does occur to me that probably the most successful bank in the European Union the last 10 years in respect to growth is a digital-only bank without branches, namely Revolut. Now, they have done something with kiosks for issuing plastic cards, which I find... vending machines, correct. Right. Let's not call them kiosks, vending machines. And I don't know what percentage of their acquisition comes through the vending machines. But I don't believe Revolut has their own ATMs, do they?
They don't. They don't.
They
And the
don't.
vending machines, it's something I believe that has happened the last 2 years. Maybe there's like 13, 14 airports where
Yes.
you find them. As you said, we don't have the numbers. Maybe it's just a marketing activity. Um,
Yep.
I would
Think of it
say
as an
that,
electronic billboard, right?
yeah, yeah, yeah. Yeah, I mean, if I were to really zoom in and see, as you said, Revolut is definitely the leader in Europe, which is fragmented, challenging. I'd say, we have um, demographics that are tough, an aging population that obviously is more resistant to moving to fully digital. But still, Revolut
Do
is.
you think that's still the case? Because I think after COVID, I mean the aging demographics are it's the fastest growth area for digital right now.
Yes, if you look at it, pre-COVID and post-COVID, definitely, that helped like everywhere, right? It
Hmm.
moved the needle like nothing else could move the needle, whether you want to call it training, education, or anything like that. But still, you see, Europe is a great example of diversity. Look at Italy, and we talk about it in detail in the book, where
Mm.
the post office, which has a huge physical network, is essentially competing with the fintechs and offering services through their network to all this population that is resisting or, really needs these, go pick up their retirement, to go talk about investments and so on. But you're right. The growth is there. It's digital, and I think in Europe it's a combination not only of COVID, it's also because of the economics, the really challenging economics that European banks faced post the global financial crisis, right? And then on top of that, the European debt crisis,
Hmm.
and then COVID, those three things, I think, created what I would call a post-dramatic, a post-traumatic syndrome for all
Right.
Europe, right? And the business model, the economic business model of European banks became unsustainable. So that's kind of, if you want, if we look at it as a seesaw between the traditional economic banking model and the digital only neo-banking model, it's to their advantage, right? Because they changed the economics. And that's what's behind all this trend. And I think our book is really remarkable in balancing data, right? And showing when we peaked in terms of the number of branches and their physical footprint of banks, and where we are at today. And again, it varies, but overall, we could say that in Europe we've halved that
Yes.
physical presence, right?
Yeah.
Uh,
I mean, I know we have talked about, let's, dive into the social impact of this. Paolo and I, when we had our talk last week, we talked about Calabria and the increase in financial exclusion as a result of lack of availability of branches. But the reality is, and this was the debate in the book, is that as you've rightly pointed out, the economics of branching no longer work. And the most operationally cash efficient banks in the world, Nubank, WeBank, Revolut, are not going to deploy branches. So there's a fundamental shift in terms of the way financial analysts and the markets will expect banks to operate moving forward, which would reasonably exclude branches from the the primacy of customer interactions that, have been in the past, just because the economics no longer support that. The cost of acquisition is going to be 10 to 100x what it is for digital acquisition. And at some point, the market's going to say, we're not interested in investing in real estate. It doesn't make sense. When Revolut can acquire 50 million customers without having a single branch, you can't argue that branches are necessary to provide banking services, from an investment perspective. You can argue that branches are necessary from a social perspective, but, how do you reconcile those two views?
Look, Brett, I agree with you about the social perspective, needed going for the branches. But there's another topic that I think is important and that we should be watching forward and see if this branch decline has kind of plateaued here, because this is another big question. And that is, we've been talking about the Revoluts of the world and their success, but their success is limited to strictly retail consumer banking. It doesn't extend so much into business and corporate banking, and definitely not into investments, wealth management, insurance, and so on. So we have to see whether they will be able to integrate all these services and become eventually a full service banking provider. We haven't seen that yet.
But I would say that if you look at China as an example, that the concept of a full service bank doesn't exist in the digital age. Right, that we can't expect Revolut to start taking on corporate accounts. They've got SMEs, and their SME business is growing quite handsomely right now. But the reality is, in terms of particularly with agentic AI, it's going to be go out and find the utility that you need, but you're not going to pair yourself with a bank, and that's going to be your full service, partner. I think that is in itself a concept that doesn't align with digital behavior today. I think behavior when it comes to banks and choosing bank utility is much more like the way people choose their apps today. People don't have one super app on their phone and use that for everything. They choose a specific app as they need it for functionality. And I think that's probably the analogy of where banking is going to go. So I don't know if saying, well, Revolut isn't a full service bank like Deutsche or Lloyd's, and they can't provide that depth of services. I don't necessarily think that that's an argument that supports digital versus physical in any respect, right?
It's not a question of supporting digital versus physical. It's like that fidgetal balance and where we're going to find it. And maybe there will be one or two digital-only, branchless, very successful providers, but that doesn't mean that we also won't have these phygital providers. Maybe it's some Lloyd's, maybe it's some Deutsche Bank, right? Because they're catching up on the digital, definitely. And the question is, will they be able to really transform and reinvent their branches? And I can imagine populating them with employees that become what we like to discuss in our book as 360 advisors. They're powered by AI and they have 360 degrees knowledge, because right now, any employee in any branch or even customer service, for that matter, of a digital bank, they only know a very narrow piece, right, of what they're focused on. Can we see AI empowering these employees to become 360 advisors, whether they are online customer service, but not a chat bot, or employees in the branch? Can we see that? that would be an evolution. And I would consider it also the evolution of customer centricity, because customer centricity is also being redefined. It was different 10 years ago. We called customer centricity if you could open an account online. Today, that's a given, right? It's standard.
Right.
It's no differentiating factor. What is customer centricity today when you have new banks, Revoluts and WeBanks, right? And you have AI coming to empower the organization, the business? How are we going to redefine it? And can it be fidgetal? And I also have in mind, Brett, the fact that digital, the Robin Hoods of the world, the eToro, the free trade, all these digital only investment apps, they have, yes, democratized access in some sense. They have grown a lot. But if you look at the numbers of, how much is invested, how many individuals have never invested, those have not budged a lot. And we need to get there. And maybe the next generation, maybe a new digital bank will be able to accomplish that in a new way.
Well, certainly with AI, I think that's possible. I guess the question that I have, and this is something that, I've talked about and debated in my books for a decade now, is that, if you look at the sort of design principles of digital, and I use this example with Paulo as well, is Henry Ma at WeBank had a really succinct way of putting this, which was, if you need to see a human to get your banking done, then that's a design failure of the technology. And so that's the way players like WeBank and Nubank and increasingly Revolut sort of think about that problem, is that I know we have this idea of service tied to a human in a branch as sort of this premium level of service. But the reality is the economics don't support that type of business model today. And secondly, if I can get this problem solved in real time without seeing a human, I'm probably going to be happier. But can I, design that interaction robustly enough so that I don't feel like the human experience would have been better? And we are rapidly approaching that, and I think AI is going to improve that. So my conundrum is this: is when we're talking about this 360 advisor competency that you're discussing, isn't that just us scrambling to try and find some continued relevance for the branch when all of the other data indicates that people are becoming less and less concerned with seeing a human if the job can just get done with the tech?
I agree with you that if the job can get done with the tech, then yes. But let's think about the trade-offs or the challenges that we faced with digital. We are facing serious cyber challenges that are increasing with AI. We are facing serious operational risks when something, isn't quite working. Who do you call? This is the human desire, if you want. So again, we have to find that balancing act. And I think that we're early in this journey. I think that we're not there yet in the developed world. And it's not fair to compare China with Europe for many, many reasons. We could write a book about that alone, right?
No, I don't think it's a matter of comparison. I think what it is a glimpse into the future, right? I think, China's transformation's been certainly very rapid, but, if you're going to make an argument that Europe or say the US is going to buck the trend and still require that human facing component, then you're bucking all of the behavioral evidence that we see in markets like where Nubank is dominant, where Revolut has been successful, or in China. It's just a matter of, it just seems to be a matter of timing, right? There's no data in the book, in the research of the book, that indicates that branch decline is going to level off at some point. You talked about maybe that's what's happening, but there's no data at this point to support that. You're right. And the only argument really is, well, people may still prefer to see a human. But again, the data, out of China and with Nubank's dominance and so forth is, if you can get the tech right, then no, that's not what happens. Is that what happens is, on a broad market expectation basis, the expectation of technology being able to deliver that utility increases, not that we are able to go back to sort of this artisanal view of human-facing experiences. So that's really where I have the issue, and this was the debate. As we were working on the book, is Europe and the US market as sort of closed loop systems, are they going to buck this trend where that human interface is finally going to be a differentiation against digital, and is going to be enough of a return to that it can support the economics of branching that's failing today? And I think that's really at the heart of the question we're asking in the book, right?
Exactly. And we all understand that there's a convergence of factors that will determine this, what exactly happens and when it happens, and that has to do with open finance. What happens with that? What can we build digitally because of regulation and because of, cultural data privacy trends in Europe and in the US? That will play a major role, because that will enable or not the kind of ecosystems that we can build. Because, Revolut is trying to build an ecosystem, right, of financial and non-financial services. Can they do that? That really depends also on regulation. And I think that it's an open question there. Undoubtedly, the data have shown this decade adjustment clearly, that all the book presents evidence, hard evidence of the branches and the other touch points like the ATMs being reduced, and we'll see where this goes. Where we're all, I'm excited also to see the next cohort of the Revoluts that are AI native, right? Let's not dismiss that. We are now, all eyes
That's the point. We could have entirely new competitors emerge on the AI stack.
Exactly.
It doesn't have to be. I mean, Revolut has a technical advantage in terms of technical culture and competency, but it doesn't guarantee they're going to win the AI space.
Yeah. And win is also what metric, right? Because yes, definitely Revolut is a success story by many metrics, but it doesn't mean that it displaced the Lloyds and the Deutsche Banks or the UBSs or whatever of the world, right? So it's a matter of speed too. How can the incumbents adjust and create, catch up with the new normal? And in the investment space, actually, Brett, they've caught up, right? I mean, robos have become standard everywhere.
Exactly.
And they weren't able to be a sustainable business model. So yeah, I'm excited about this. And the question whether the new cohort will be branchless, yes, the new cohort will be branchless. We will be here. It's not too far. I think in the next 5 years we will see some new disruptors that are disrupting the 10-year-old, 15-year-old cohorts that we have seen. Let's not forget that Revolut and N26 and I think Monzo. When were they born? It was just 10 years,
2014,
right?
yeah, 2015.
Yeah, yeah,
I mean, they
yeah.
do have some legacy there, but not. I mean, is it enough to slow down their adaptation? It's possible. Let's talk about cashlessness. You have we have, of course, in the UK a very rapid move to cashlessness, but in Italy, there's still a fairly dominant cash culture there. Germany,
Oh,
for sure. Japan. We didn't cover off Japan in the book, but it is in the aggregate data for the branch decline. But in terms of cash decline, this seems to be happening faster, and with agentic AI and sort of personal financial AI, it's pretty clear you won't be using cash in that setting because it doesn't work across those rails. So it would appear that there's a lot of supporting evidence for moving away from cash, and therefore it's going to impact ATMs. But if you were sitting in a bank today as an executive, and you work with these executives, and you've been on this side of the fence, and you were having to think about how you can move a population in Germany or Italy to sort of a cashless environment, how do you think you could incentivize that so that you don't have the massive costs of carrying cash? Because we know now that cash handling is much more expensive than, sort of electronic payments, right?
yeah. And more cyber risk, more risk, operational cyber risk. ATM networks present new risks. That there's no doubt about it. I think there it's all about being able to bundle in wallets kind of rewards and incentives to move people into these interfaces. And that's, I think, that what we see from different providers trying to do to move these populations. But there's resistance from the elderly people, and there's resistance from societies that value more privacy and are moving at slower pace. But we're not going back. That's for sure. We're just moving at at a different pace.
Right. So it's going to happen. It's fairly inevitable. It's just a matter of time. All right. So let's then talk about the social element to wrap this up. You talked about the post office bank concept.
Yeah.
I think Paolo posted a picture of one the other day, actually, a post bank somewhere. But I will say that, this is an ongoing issue because while we expect banks to provide branches in affected areas demographically, where customers aren't adopting digital and so forth, based on the cost of provision of services today, it's extremely expensive proposition. And what, do banks as commercial organizations that have to report back to the market have to gain from carrying loss-making real estate in these regions that don't have enough business to sustain, branch operations? Which, if you're going to incentivize banks, what are your options? If not, is that social infrastructure going to be post offices? Is all the branches that we have in the future going to be post offices? That's the question, I guess.
Or maybe the banks will be grouping together and opening up a space in a mall. Yeah, in a mall where there's 5 banks that you can walk in and do whatever you need to do, something like that. It's shared spaces. That can become another way of doing things. And I can see there that even digital only banks would be open to joining these shared spaces.
Oh yeah, that's possible. Yeah,
And
I mean,
and
we saw that with Starlink,
innovating
right?
with in-person customer experiences, right?
Yeah.
Why not?
So, if you're on the banking side today and you're having this conversation with regulators, and regulators say, "We really want you to leave those branches open," um, you know, how does that conversation go today in Europe?
I mean, only in the Nordics, I think that we have seen the regulators stepping in and really stepping up and saying you have to keep a number of branches open. We're not there yet in other places, but I think the market forces will take care of this. Some banks will take this as a differentiating factor and try and see if that really makes a difference. If
Yeah.
everybody's going branchless, to have one entity that has branches, what's the differentiating factor? If tech is everywhere, you need to create digital or phygital differentiating experiences. And that is
I mean, I get
innovation.
that. Yeah, I get that argument, Effie, but I think, in my mind, it still comes back to basic economics. And that's the core problem. The reason we're seeing such rapid decline in branches around the world is that the economics of acquiring customers at scale across digital is so different to what we've seen with traditional onboarding through branches, that the business case for branches is getting more and more difficult the entire time. And so, if you've got a proposition that, oh well, someone may be able to differentiate with a phygital experience, you still have to solve that problem of the economics. And unless you're going to,
Brett, JP
it's a question
Morgan
of
is
what?
doing it. It's a question of scale, right? If you have scaled enough, JP Morgan has the audacity to go and open another 500 branches in this environment, right? It's a question of scale.
I mean, we argue that in the book, and we argue that Chase has bucked the trend. But what we do raise the question of is Chase actually opening new branches, or are they just redeploying smaller branches to replace the older branches that were more costly and larger, and using that to play with the numbers? I think it'll take a few more years to really play that out and see for sure. But the trend, economically right now, I think, I personally don't buy the scale argument, because if 80% of branches are losing money and you scale it up, then you just lose more money. So that's where I sit on this. But let's finish off on a positive note.
Yes.
And, in terms of the outlook in Europe, for digital financial services and financial inclusion, and these changes that we're seeing, what gives you hope that in 5 to 10 years that this is going to be stabilized and provide a really high quality banking environment for end users?
I mean, I think 10 years is too far to look at because of the AI disruption. I'm looking at 5 years. And I think that everything is focused on how to leverage AI. And I'm looking at new disruptors, really. That is where we're going to see just a completely new business model. And maybe there we can use data from the branches in completely new smart ways. That's the only way I can see that we will have at least maintain the levels that we have today. And that ties back to what we are discussing about intelligent 360 advisors in branches. If banks that have branches can do that and can differentiate, then I can see this network kind of remain stable and having in certain countries in Europe this fidgetal situation stabilizing.
Okay.
That's
Well, I mean, I like your optimism, if I can call it that, in respect to that. But as a digital bank operator who's built a digital bank and sort of argued the case studies on this, I would say that is a competitive blind spot for organizations who think like that, because it may reduce your transformability. It may slow you down in terms of digital adoption because you're still hoping to find a way through with your traditional channels. I think really it comes down to, in the end, is this, all data suggests that this digital transformation is a one-way street in terms of the way it goes. But, we have, increasingly older customers affected and being displaced or excluded because of that. The real question is, do we need social infrastructure to mitigate those risks, or is AI, tech, and so forth going to result in, a human-like experience that renders physical interactions obsolete? And I don't know the answer to that. Although, if I was a betting man, I would bet that in 10 years, the only branches that remain are highly specialized for dedicated high-end wealth management services in a concierge setting, rather than any, day-to-day banking services. But I guess that's why we're here to discuss, right?
Yes. In a decade, I can see your scenario, but I can equally see the scenario of a universal basic income. Right?
Of course, yeah. Which then that in itself renders the whole concept of banking maybe somewhat obsolete as well, right?
Then we're changing the social construct completely, and we have to look at the society, the consumerism that we have today, the credit, the fractional reserve banking. Maybe all that will be changed in 10 years, and we don't have that. We can't look at banking in isolation, right? We think of it as it is today with these elements, and I can see that scenario in 10 years, not in 5.
Yes.
But 10.
No, I agree.
We agree with that, and on that note,
yes,
very excited.
Check out branchtomorrow.com. Go to Amazon and you can check out the Kindle, which is available for pre-order right now. The soft cover will be coming sometime in the next couple of months. We're just waiting for Wiley to list that on Amazon right now.
Brett, I'm also excited because this is a book with a lot of diverse voices. It's a global look. It's looking at really what's happened in this past decade, presenting, this hard data that shows that the peak and the trend is clear, different paces, like everything, right? In fintech, the world is not flat. So it's extremely interesting and a great read.
Thank you for your participation in the book, Efi. Thanks to everybody for tuning in. And it's been a great collaboration. It does bring a rich, as you say, diversity of voices to the issue. And, hopefully another bestseller in the banking space. And all the best to you, Efi.
Thank you.